What's going on, everyone? It's Maximus Trades back with another video. So today I didn't really take a trade because it was Sunday. I didn't really like the price action, so no trades for me today. So instead of being a trade recap, this video is going to be going over my two trading models, my New York session model and my Asia session model. So probably want to do around at least one example trade for both. So right now it's Asia session. Right now it's 7 p.m. So Asia 7 p.m. Eastern. So Asia just opened. So I'll be walking through kind of my Asia model and then my New York model as well. So let's dive right into it. So for my Asia model, the main thing is it's a continuation model. So I'm looking for kind of trades I can basically continuation trades and not reversal trades. And the reason I say that first is because my New York model is essentially a reversal trade. So you'll be seeing me switch up between those two. And for me, I think it's a little bit challenging. Even like for me, I've been using both these models for a while now, but it's challenging to try to switch up from looking from a continuation based idea and like a reversal based idea. But essentially my New York model is also kind of continuation because we have continuation in our confirmation, if that makes sense. It probably will when I explain it, hopefully. But the other thing is like Asia is like more like it's really continuation based. Like I'm not entering at a low or high. I'm just entering off like I see two lower time frame conferences I'm in. So let's get into that. So first thing you have to understand about this Asia model is you have to understand the difference between Asia and New York. So New York is a lot more structured price action, in my opinion. It's a lot more easier to predict where prices are going to be and different areas it's going to target. And Asia is more that volatile, sporadic movement, and that the reason being it moves very slow because you have less traders trading Asia, but there's still large quantities of money that are traded in. So all of a sudden you can have these random spikes of volatility during Asia session. So that's why you have to be really disciplined and direct, and discretion plays a really big role. So the more I've back tested Asia for like maybe like 50 to 100 hours, so that experience of me just sitting in front of Asia like the session is helping a lot. So and anyway, you're gonna get confused if I keep explaining it. But let's just get right into the model. So I'm on the 4 hour. I always mark out just a key high or low, and I see that we have an unfilled 4 hour bearish value gap over here. So I'm looking for like these high time frame pools of liquidity or targets that I think price might want to go to. And if I see confirmation, I can just take continuation up to those highs, or yeah. So instead of like me saying, okay, we have a 4 hour unfilled gap, I'm gonna wait for the market to come to this gap and then reject. My thinking is if I'm already going to know that the market's going to come up, why don't I just take continuation up? That's what I think. That's like the way I think. And then, yeah, 1 hour, we don't really have any. We have these highs up here. Have highs again. I guess I'll mark out this high. Looks pretty significant. And then it looks like we're going to have some equal highs, lower time frames over here. So we have these 5-minute equal highs. Relative it looked like relative equals in the thing, but okay, so on the higher time frames, but just kind of like a higher low here. So again, I'm probably going into this day looking for longs just because we have an unfilled 4 hour gap in our direction. We kind of just took nothing really on the higher time frames that can tell us. I am going to check the news. Where's the news? So this is today. There's no news. It's Sunday, so there's no news, I guess, for Japan either. And the other thing I was going to say, I forget. Okay, important. I think that's something important I was going to say. But whatever, yeah. I trade these both on futures, so. Oh, yeah, I was going to say about my daily buys. So you'll see me going to New York where I don't really have a set bias, but as you can see right here, I've already dictated my set bias is going to be longs just because we have an unfilled 4 hour gap in that direction. There's nothing really else. Like, I mean, might even check the daily. I can't lie. Yeah, there's like this. We took out this one kilo on the daily, so maybe that's good for longs as well. There's nothing really else that's gonna like saying that we want to go lower, right? On the lower time frames as well, we have this 1 hour gap. Maybe we still have this 4 hour gap up. So I think we want to take longs up to that gap. We have this 15-minute right here. The small 15-minute gap we just made. And yeah, I'm not really seeing any reason we want to go lower. So I think that's my bias going into this is going to be longs. Or you don't have SMT or anything up here, so that's good. So yeah, you'll see me make a bias on Asia, but when I go to New York, I won't have a bias. So let's check it. So basically, I'm just going to go on the 1 minute. I trade mainly the 1 minute on Asia because it moves because price moves generally so slow. So I'm looking for a high. I'm looking for a long. That's pretty much it. And then I'm probably gonna look for like a 5 minute fair value gap retrace or like a 5 minute fair value gap to form, retrace, and a 1 minute fair value gap confirmation. So it's really simple, really straightforward, like just pure fair value gap kind of liquidity speed based model. So it's like really ICT based. So again, we're coming up here. I have to keep searching between the time frames. Don't really see anything yet. Oh shoot, I want 2 minute. Key off my screen. Okay. Let's keep it going. So it looks like we come down here. We take out this low on NASDAQ, this 1 minute low. And the S&P looks, as you can see, we have an SMT over here. We're above this low. So that looks good for longs. Like I look for these now basically how this model works. After finding my daily buys, I've already made a video, like I think 2 or 3 videos explaining like step by step, go in depth on how this model works. But just to like a one line break it down is basically find your daily buys and use ICT concepts on the 5 minute and 1 minute, mainly the 1 minute time frame to enter your bias, right? Enter whatever your bias says. So right now I see 1 minute SMT. If I have like a 1 minute fair value gap in our direction, okay, it looks like we're probably gonna go lower, and I think we probably did not make the SMT is probably gone now. Yeah, as you can see, we actually closed below these lows on the ES, so we can see we did lows on the 5 minute as well, and on NASDAQ we have not dipped below these lows, as you can see over here. So that's a 5 minute SMT, which is probably stronger than 1 minute SMT. So we're just looking for a 1 minute value gap to form. Pretty please. Okay, never mind. I think the SMT's gone now as well. So keep going lower here. Okay, there's a 1 minute gap forming here. Okay, so this 1 minute gap has formed in our direction. So we don't really have anything else backing us here. The 5 minute as well. It's bare laggy. My bad. It's pretty laggy. We have this 5 minute FVG here, which you've just gone up and filled, which probably might want to push us down a little lower, maybe. Yeah, I don't know. We can see if we inverse this 5 minute FVG here, and I'll definitely look for continuation longs up 1,000,000%. So it's already 8, so it's been an hour since market open. We'll see. So one FMG. So hopefully, if we can push higher, that's good. If we push lower, I don't think I'm gonna catch a trade today on this day. Okay, so we go a little lower up. Okay, we inverse this 5 minute FVG, come down here, make positives. We respect this 1 minute gap here. So basically, what happened was we inversed the 5 minute for value gap, and now we just made a 1 minute for value gap. We went down close, but then we respected. We didn't inverse the 1 minute gap. We respected, and we have positive displacement out of that gap. So unless we have a 5 minute SMT here, I will not enter. But I'm literally looking. I'm probably gonna look to enter here. We don't have 5 minute SMT, so I'm probably gonna enter unless there's a gap holding us. There's no gap holding us. So I'm gonna enter probably like up here at this candle close, or like half through this FEG. I'm really just gonna target this high up here, and I'm gonna put my stop like below the 50% line of this bullish FEG. That's probably what I'm gonna do right here. Let's do this over here. Okay. I'm just taking this continuation long, and I'll probably go break even as soon as we hit this high. So yeah, I always go breaking up this part of this model too. I always go breaking at the internal high, and I don't really take partials because it's such a small move. But I might take partials at this high. It's just all about I really just monitor it and see how it goes. But let's see now. Push up. I'm gonna go break even here. So we took a little time, but we eventually came up. There's no way we're getting break even. Oh, that's pretty bad. We got TP edged. Got break even. So That sucks, but unfortunately, yeah, we were up in the longs. We pretty much almost hit TP. We were really close to TP, but we got edged up. Maybe it was SMT. That's probably my fault. I was kind of lazy. I didn't really want to check. Yeah, there's a 1 minute SMT which kind of brought us down. So I probably would have took partials in that scenario. At that, I hear. To be honest, I just didn't check. I promise you in the live, like when I had more, if I had more time on the live example, I would have like. I'm not a live example, like on actual like market, like on market open. I would have checked. But whatever, like it's still a good trade. We didn't lose, we got break even, but it was like the good idea behind it. We just went right up after, we said we were gonna go right up off that continuation. It's like, so this is an example of a trade I would take on Asia, and I would take this trade every single day of the week. It's just continuation up, and as you can see, like we wanted the long, but look, this whole move was a long move, right? This whole like from all the way down here. There's a whole ass long move, but we only entered here after we saw our confluences for continuation. Like we didn't enter here, like we only entered here, right? So that's what I mean. You have to have lots of discipline. You have to be direct, and you have to have your confluences lined up. Even though they're so simple, like the offense literally, like confluences are like 1 minute for value gap, 5 minute for value gap. Like and this is such an easy model to trade, but it's easy in terms of technicality, but it's difficult in terms of like your emotions and your discipline, right? So that's an example of what I would take on an Asia trade. Right here we got TP edge. I would have taken look. Yeah, I said I was gonna take partials at this high. I just didn't. Yeah, I was gonna take partials at this high 50%. So you probably would have made like what is 100K count? Probably like a 1 to 6. I risk like 2% or 1%, like 1,000 around. Yeah. But yeah, essentially that's just like an average Asia trade with my model. So those confluences stack up. So now let's get to the New York model. So my New York model is the one that got me funded, the one that this definitely brought me the most success in terms of like profit, but in terms of win rate, it's actually been my Asia model. I have like a 75 to like a 70 to 80% win rate, I would say, on the Asia model. On the New York model, it's like a 55 to 65% win rate on the New York. But my average risk to reward on Asia is like 1.1. So like really small, like 1.15, but on New York it's like 2.8, 1 to 2.8. So I'm making a lot more money on New York because I have such a high reward to risk, but my win rate is like 10% higher in Asia, but I'm not making that much. And to be honest, I think they're about equal. Like, I mean, profit obviously is my New York one, probably makes me more money, but I'm more consistent with my Asia. Like on my paper trading account, the ones I've been showing in the last couple of videos, that one account, like I've just been like just trying Asia around. I have like I just lost my first trade on that account in the last, like I lost my first trade, then the last video I posted, and that was the first loss I had in the last 3 weeks. So the whole 3 weeks I was winning. I didn't lose a single trade for 3 weeks, but then my first trade I lost. But like if I traded the New York account my New York model for 3 weeks, I still would have made more than my Asia model. But like it just kind of shows you like there are two different models, two different amounts of money being made. One is a little, I think an advantage of New York is you're making more money, but the advantage of Asia is you're more consistent with your wins and losses. And I feel like, I mean, trading is just a capital game. So if I had more money, like if I could just like I think win rate is definitely better than like how much profit you're making. Whatever. No, I'm just whatever. Whatever. That's the main point. Is like I just like New York has definitely made me more money, but Asia's been more consistent for me. Is what I wanted to say. I don't know why I went off on the side over there, but anyway, let's get to New York Open, and let me show you guys my New York model. It's too late for this shit, bro. So I'd be yawning so much. Okay, so it's Monday. So I hope this can't be a no news Monday. Please, please, please. Please. Okay, it's not a no news Monday. It's some good yellow folder news. So, that Loki had a kind of a big impact, I can't lie. So, what I do on New York, first things first, mark out my high time frame key levels. So, there can be highs, lows, for value gaps, areas of liquidity. So, right now I'm just seeing, boom, you have this 4-hour little gap over here, and we have this sweep of previous week highs. So this is a liquidity sweep to the upside. Look at S&P now. Same thing here. The gap kind of been filled this gap. It's already been filled before, but like went up and refilled this gap and swept out all this liquidity. It's looking good for shorts. I can't lie. It's a key level. This is already a key level. This is a key high that's been hit right now. Okay. So now I go to the 1 hour. I see this gap, 1 hour gap. So price is probably attracted to this gap, and this is kind of like where that Asian discretion comes in. Like, I am probably looking for shorts just because we took out this key level, and there's this 1 hour gap down here. So this gap is kind of like acting like a magnet for price to come down to it. So it's probably really looking good for shorts right now. So yeah. So I go to 30-minute, same kind of idea. 15-minute, nothing much. 5-minute, okay, yeah, 5 minute here. So basically, this low-key might, like, I don't want to, like, I want to show you guys my actual model, but I might just take continuation shorts just off, like, discretion here, just because it's, like, this is, like, I never really see this on New York, but it's looking pretty good for continuation shorts. But basically, if I see my key level being hit, so my 4 hour high or whatever, and my 4 hour gap being hit before market opens, I want to wait for a 5-minute liquidity sweep, so price can regain that, fuel or whatever. Or like, not, I don't know if I said 5-minute liquidity sweep, but like a liquidity sweep once again, so price can go down. So that's probably gonna like I'll probably look for a key level on the smaller time frames that we can sweep out before we go lower. That's normally what I would do, but I have a really strong feeling it's just gonna go down to like right here, this level right here. I have a really strong feeling that's gonna happen, but we'll see. Okay, so we're on the 1 minute right now, and actually normally on New York I'm on the 5-minute. I just use the 1 minute increments on FX replay, just to show me how the candle's going if it loads. Super laggy. So let's see what happens. Okay, so we have a sweep out of this 5-minute high. So a liquidity sweep of this 5-minute high. I'll probably wait for the first bearish candle to form after the sweep right here. So I'll mark out the equilibrium of this candle. So first of all, my key level is hit. We filled out the 4 hour fill gap, and we spun up and swept this 5-minute high, and now we're at a bearish candle after this 5-minute high. What if we have an SMT? So this high, we do not close above the high on Nasdaq. Oh my god, it's so slow. Wait, where's the high? Okay, there's not really a high on Nasdaq. I mean S&P, so we can't really count that as anything. So if I see a 1 minute, oh Jesus, if I see a 1 minute continuation form off this, I'll take it. Okay, looks like we're going higher, and that's fine. Like, I would rather go higher right now because I want to see a sweep of these highs over here. So these highs, if we sweep out these highs, I think that's perfect. Like, that's perfect right now. If we sweep out these highs, so on S&P, yeah, if we sweep out these highs and make an SMT at those highs, I 1,000,000% think we're going to go lower. I might just be an idiot, but that's what I think. I'm not an idiot. I think I'm going to be right. Please. Oh, sweep out the high. Yes. Okay, we set this high on Nasdaq. Did we sweep out the high on S&P? That's the question. Oh shit, I was streaming. Why did I do that? S&P. No, we did not. We're much lower than that high on Nasdaq. So we have the 5-minute confirm. So we have again 4 hour for value gap, bearish cup filled, and we have a 1 hour for value gap that's bullish, that's not filled. We have a 4 hours liquidity sweep, and we just have a 5-minute SMT right now and a 5-minute liquidity sweep. So now I'm gonna look for the first bearish candle to form after this 5-minute liquidity sweep. For first bearish candle, like so, like this candle that just formed. We just drew onto this 4 hour gap once again, and we swept out these 5-minute highs up here. That's even perfect. I didn't see that before, and we made a 5-minute SMT. So like generally, I do think this trade's gonna hit what I'm gonna make here. If it doesn't hit, then it's just like, it's one of the few trades I lose on this model. But I'm gonna follow. This is like exactly what example I would see in my model, right? And like you can see, this can happen at any time during New York. Okay, I've taken trades at 2. I've taken trades at like 9:35. I've taken trades at like 10:30, which is now, right? So we have mark out the equilibrium of this 5-minute candle, and already we see if we fill in this gap, if we respect this gap and you have negative displacement off this gap, I will enter. Yeah, I'm entering shorts, and I'll put my stop loss probably up here, target all the way down here, and I'll go break even at some point, and I do take a lot of partials on these New York trades just because I'm targeting so much and it makes sense because I'm targeting like what previous day lows. Oh, I'm lucky gonna do this. I didn't see this gap. This big ass gap. I think was it Monday, right? It's an NWOG or whatever. I don't know, or daily opening gap or whatever. Because price normally just crashes through those. Oh, okay, never mind. We didn't get filled, but still, if we still have to. Oh, I lucky forgot. We have to fill. You have to like fill in this equilibrium level. Which is why I marked it. What am I doing? It's too late. Yeah, fill in this equilibrium level. Have negative displacement off that. Can we inverse this gap? Okay, never mind. Yeah, that's good. We're entered. Okay. I swear if I lose this trade, because I've been hyping up this model. Oh, okay. Damn. Okay, we got lucky. Got stopped out there. I don't know. That was kind of weird. It was just chop. Like, that's just chop. To be honest. Like I said before, like this is a trade I would take every single day of the week on this model, and normally it would hit. I guess it was a little choppy right now. Maybe we could re-enter if we. I'm lucky thinking about maybe. I'm so like super sure it's gonna go lower. So okay, we swept at this 5-minute high. Do we make another SMT? We're not even at those highs at the S&P, which still makes me like so annoyed. Like this is like so good for shorts. There's like conditions, and that choppy price action look, you just sold us. Okay, we can look at run the same thing again. We still have the SMT still holding, so we can go ahead and mark out this gap with this 15-minute thing here, and we have a gap down here just to be aware of. So we'll probably enter after we inverse this gap. But I still think shorts are on the move. Like it's so set up for shorts right now. Can we inverse the 5-minute gap? And we come down. We have negative displacement off this gap. Yeah, I still think shorts are the move, man. I still think shorts are the move. Like we just want to target all of this, this whole unfilled. I'm like telling you, all of this is gonna get filled. At least if it's not today, then the next day. I'm so confident in these shorts, but I'm probably like, this is trades I'll keep taking. Like, I don't know, and I'll probably go break even at some point. Okay, finally we get some negative displacement. There we go. Okay, now we're going lower. Here's where I'll probably go take 50% out of my position and go break even. Yeah, okay. Oh shit, that's blessed, low key. Okay, that's 1,000. Maybe what we lost. I knew these shorts were gonna work, bro. I'll take 25% after we hit this low. Okay, shit, look, you have to pause it better. Oh, Jesus, wait. Okay, yeah, I'll take, like, I'll take 25% out here, and then we'll just let these floaters work. I still have like 3.1k I can make on this trade. Oh, I didn't go break even. Shoot, I didn't see that. Okay, we're at break even, so it's calm now. I don't know. I still think like even if we get stop that break even, we still like made like more than we lost, and I still think there's like this NWOG is gonna get like blitzed through. So now we're down to Asia. Like I will hold these floaters as well. Like I don't mind holding these floaters. This gap needs to be like destroyed. Okay, yeah. See, as you can see, we're getting pushing lower and lower. So I do think at some point we're just gonna go down fully and get this gap. I'll probably raise one like here. Okay. I can hold this to like basically the next day when I trade. To be honest, 'cause I don't mind it. And we're at break even anyway. So these like my trades on New York take a lot more longer to hit. But you can see like I already took partials at 2 different places and I made a lot of money. And that's just like that's just how these New York trades work. 'Cause I'm like targeting such long area, like such large areas that I normally I only have basically 25% of my original position left because I closed 50 and another 25. So I only have 25% of my position left. And to be honest, I'm actually gonna close like 50% here. Like, cause we're lower and we're chopping. It's already Asia session, and so now I basically only have like 12.5% of my position left. And you know that's normally how this trade works for me. I knew these shorts were gonna work, and that's why I re-entered. And I guess that choppy price action kind of just pushed us up or whatever. But it's good that we re-entered. I knew these shorts were gonna work. I knew shorts were the move for the day. Like, just they're so set up, and we like it's luckily that I didn't have to take any continuation because I knew, like I saw the conditions work. Like I saw like we went up, swept out liquidity, made SMT, retested equilibrium of the candle. Oh, I get something break even. Yeah, equilibrium of the candle, and we had the 1 minute confirmation. All the confluences lined up on my model. And by the way, I've explained this New York model plenty of times on the channel. There's a lot of videos that talked about it. And my best video I think was on the New York model. So if you guys have more questions on that, like I want to go in depth, definitely watch that one. Okay, Loki's getting close to the new next day. Yeah, to be honest, I'll probably just close it right out. So yeah, we held this trade for basically an entire day, which sounds crazy. Normally it did not take this long, but that was because like, bro, we were looking targeting like all of this, and our lowest point was pretty low. Our lowest point was pretty low, but essentially like I think it was these highs were definitely the main target, and we smashed through these highs over here. So we closed out the full position. I think that's like what. That's 300 made 550, 250, 1,000. So it's like a 2.1 thousand. 2.4 I think thousand trade, and we risked 1,000, so it's like 1 to 2.4 ratio. That's pretty good. And yeah, good trade. Yeah, so I basically guys showed you how an Asia trade would look for me. I lost the New York trade, but I won this big New York trade. So those are essentially my two models that I trade, and you can see how they're kind of different, but they're both similar in the new ways. And I think the one thing that ties them together is like market experience and discretion, of course, like discipline and rules and stuff. But yeah, essentially that's just my two models I trade. Hope you guys learned from this video. If you want to see them more in depth, I have separate videos on my channel that go really in depth for both models. But I just want to make a video today like combine the two and like showed you guys how they work, how with some similarities and some differences. But anyway, hopefully I can trade tomorrow. It's Monday. So I probably will trade tomorrow. I'll see the news, what we have, and I'll probably come back at you guys with another recap. But anyway, that's enough for today. Smash Trades out.